A warning from CoreLogic just rocked the Florida housing scene. While most eyes were on the big coastal markets like Tampa and Miami, Cape Coral quietly slipped into the nation's top 5 markets most at risk of a major home price decline, with CoreLogic estimating a 70% chance prices keep falling through 2025. And the numbers already prove it. In barely 12 months, Cape Coral's median home value has dropped by over $40,000, wiping out nearly a year of pandemic-era gains. Home prices that once climbed at breakneck speed are now tumbling. Inventory is exploding. Buyers are disappearing. Investors pulling back. And the question for many homeowners and would-be buyers now is simple. How much further could this fall? Between early 2020 and mid-2022, Cape Coral was the poster child of the pandemic-era boom. Driven by low mortgage rates, waves of migration, and the dream of waterfront Florida living, the area saw home values soar. Some estimates suggest price gains of nearly 75% over that period. But what goes up fastest often reverses fastest, and now 2025 is proving to be the correction year. According to Zillow's Home Value Index through September 2025, the typical home in Cape Coral is valued at $341,537, marking a negative 10.3% drop year over year. Redfin reports a median sale price of about $360,000 in September 2025, down approximately 4.0% from the prior year. Meanwhile, Rocket Homes lists for June 2025 a median sold price of $379,376, a decline of 4.1% from June 2024, with the median price per square foot at about $224. The listing side tells an even starker story. In August 2025, homes sold on average 0.02% below asking price, as the median listing price was about $432,600 and the median sold around $357,000. Listing counts have ballooned. As of September, 30,225. Zillow lists about 3,858 active homes for sale, with 489 new listings that month. Taken together, this equates to lingering inventory and slower transaction velocity. Days on market have surged too. In August 2025, the median time to sell in Cape Coral was 102 days. Supply now significantly outpaces demand. Local data from the Royal Palm Coast Realtor Association show that in October 2021, inventory was just 773 homes, and month supply stood at 1.3 months. By June 2025, active listings reached 3,046 homes, and month supply soared to 7.3 months. Charting listing price movement. The Fred reported median listing price year-over-year change for the Cape Coral-Fort Myers Metro reads -0% in September 2025, with prior months trending -6.2% in June and -7.5% in July. Behind these headline figures lie the hidden currents reshaping the market. Investor participation, which helped fuel the boom, is now in retreat. Rental market data show average asking rent at about $2,015 in September 2025, down -3.8% year over year. Vacancy rates are climbing, and investors who once assumed near-instant flips or high yields are pausing or exiting. One data point: the monthly price-reduced listing count for September 2025 reached 2,836 in the metro area, up sharply from prior years. The ripple effects don't stop there. Homeowners' insurance premiums in coastal Florida are rising, flood zones are expanding, and new construction soundproofing and hurricane-proofing mandates add tens of thousands in upfront cost. The cumulative effect? Buyer hesitation meets higher carrying cost. Despite all this, some local voices suggest it's a correction, not a crash. The Realtor Association notes that June 2025's median sale price of $361,975 still sits above the October 2021 figure of $355,000. They argue the market is simply returning to more sustainable levels after the pandemic-fueled spike. And with tighter lending standards than 2008, they say the structural risk is lower. But there are signals worth watching. First, inventory levels nearing 6 to 8 months supply in what used to be a sub-2-month frenzy market. Second, median prices declining beyond the current -4% to perhaps -7% or deeper if demand remains weak. Third, days on market continuing upward past 90 to 100 days. Fourth, insurance and climate risk costs continuing to rise, pricing out marginal buyers. Fifth, net migration and investor inflows each stalling or reversing, reducing demand at a time supply remains high. For sellers, the new reality is painful. Homes once sold in days, often above ask, now wait months and often close well below original list. Anecdotal reports include listings cut 6 or more times. One waterfront home listed at $1,150,000 in April eventually relisted at $899,000, representing a drop of nearly 22% and adding negotiations for closing credits. For buyers, there is opportunity, but with caveats. The flood of supply gives stronger negotiating power, more choices, and lower risk of bidding wars. But the cost of ownership remains high. Mortgage rates north of 6%, insurance premiums that in some coastal zones can approach $10,000 to $13,000 per year, and maintenance costs tied to age, storm damage, and special assessments. Without a clear path to value appreciation or rental upside, many savvy buyers are holding off. Here's how you decide what to do next. If you're holding property, recognize that the strong upward momentum of the past is gone. Unless you have a long horizon and can withstand carrying costs for multiple years, sitting still and waiting might cost more in interest, taxes, and insurance hikes than price declines. If you're buying, this market is not the bubble of 2021 to 22. You're not racing other buyers, and you can negotiate. But your decision must factor in full ownership cost, not just the sticker price. If you're an investor, you no longer may count on rapid appreciation or easy rental growth. Cash flow calculations must reflect moderate rent growth, flat to slightly down, and potentially longer holding periods before value recovery. Cape Coral's housing market is in transition. The boom is over, the correction is underway. Whether the market finds a floor soon or drifts lower hinges on demand reinvigorating, inventory clearing, insurance costs stabilizing, and external factors such as migration and economic policy aligning. And as Cape Coral's boom collapses and a new chapter begins, one thing is clear. This isn't the end of the story. It's the beginning of the next one, and you'll want to be ready when the tide finally turns. So stay subscribed.